Let's take a moment and look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how BTA look at the market, how we analyze the market. This is Rod from BTA, and we are known as the middle traders. Now, this is part three of walking with the market. Part 3. Okay? We're going to look at some other breadth indicators that I look at on a weekly basis. Like I told you in part 2, I can't show you all of the market breadth indicators, because if I do, I keep you here for 3-4 hours, and I know you don't want that. But if you ever decide that you do, you know I'm down with it. Okay, let's do a boot camp. Let's go for 8 hours a day, every day for 3 days on the weekend if you want. Run through it. See the whole process. Okay, well look, what you got here is a daily chart. These are secondary market indicators. Okay, it's a daily chart. And this is the NASDAQ composite up top. I showed you this once before. This is NASDAQ composite up top. In this box here, in this area, this indicator right here is a short-term overbought, oversold oscillator. When it's below zero, that's not the good time. When it's above zero, that's good. When it falls back below zero, that's not that good. Okay, the more time it's been below zero, that's not a good time. The more time it's been above zero is when it's good. Now, especially when you're long, okay? Well, I shouldn't say good, because it could be good if you're shorting, right? I don't know. But when it's above zero, that's good. That's the buy that's on the long side. When it's below zero, you might not want to be as long. You got to be careful, because it could be some downward momentum there. This is overbought, oversold oscillator, short term, okay? Well, look at where it's at right now, all right? Let me see if I can bring this in, see if I can zoom in on this a little bit more so I can make sure y'all can see it. You see where it's at right now? Okay. You see this overbought, oversold oscillator for the NASDAQ? We have gotten back above zero on Friday. Over here, you got the 10-day moving average of up volume in blue and the 10-day moving average of down volume. The 10-day moving average of down volume in red. What you want the up volume. If we go on long, we want to see this oscillator here above zero, which it is. Okay, and we also want to see this up volume, which is the blue line, crossing above the red, which we got last week. Okay, so you see, this is another way to look at that volume. Remember, when we was looking at the NASDAQ and the Dow Jones, the ETFs and all that, we wasn't seeing the volume coming in that great on the on-balance volume line. We wasn't seeing that volume coming in that great on the volume bars. But you see here, you could get a different look at the volume. You see the 10-day moving average, the blue line has crossed above the red, okay, of the 10-day. The 10-day moving average of up volume, which is the blue, has crossed above the red, which is the 10-day moving average of down volume. That's telling you there's more up volume coming into the market over the last 10 days. Okay, it's smoothed out so we can see the data good. All right. Now, when the up volume, you want to see if you're long and the market is going up, you want to see the up volume staying above the down volume for as long as possible. Okay, when you start seeing that down volume getting above the up volume, that's when you start getting situations like that. So down here we got the a 10-day moving average of new highs, which is in the blue, versus the 10-day moving average of new lows for the NASDAQ. Remember I showed you that histogram chart in part 2 where we're still making new lows? Remember I showed you that, but it was less than 5%? Well, you can see it here again. You see the red line of a 10-day moving average of new lows. The red line is still above the 10-day moving average of new highs. So eventually we want to see this blue line get above the red and start saying we're hitting new highs. We haven't seen that in a long time, but that's what we want to see, okay? Like right here, when the blue line starting to get above the red. Okay, when the blue line, the new highs start getting above the red, see, you up. When it start crossing back, you're getting a little down this here. But look when you got it back above it here. You see that move upward? So when that blue line is above the red line, as more starts hitting 52-week highs, quite naturally the markets might be rallying, okay? So that's for the NASDAQ. Let's look really quickly here, and let's look at the next chart, which should be the New York Stock Exchange. Let's see. A little slow coming in because I'm using a lot of bandwidth right now. Okay, so this is New York Stock Exchange, the New York Stock Exchange composite up top. You see the price action, right? A line chart of closing prices. You see that? What that look like? It's a chart pattern that you've seen before. What does that look like? Inverted head and shoulders, right? Go back to browntradingacademy.com and look at your videos of different chart patterns. It don't have the length of time and the depth of what we want to see, but it looks like one, a little baby one. It's not a proper base pattern, but it looks like it. Are we going to get a rally? Well, let's see. Okay, but what I want to look at here is not so much that. All right, this is the line chart of closing price in New York Stock Exchange composite. But I want to show you the oscillator. You see, it's trying to get back above zero. The short-term overbought, oversold oscillator is trying to get back above zero on the positive side of the momentum. Hopefully, price start moving up. Look right here, y'all, for New York Stock Exchange composite. You see the blue line, the 10-day moving average of up volume is starting to cross above the red line, with the 10-day moving average of down volume. The up volume is trying to get above the down volume. On Friday, it did it. Okay, telling us there's more up volume coming in than down volume. That's positive. You want to see that. Look at the crossover here. More up volume than down volume, we had a little pop. More up volume than down volume, we had a little pop. More down volume than up volume, you had a little drop. Are you picking up the jewels that I'm dropping? Are you picking it up? Listen, it's starting to get a little more constructive out here. We're starting to see a little volume coming in. Okay, we're starting to see a little momentum coming in different. And when you look at it a different way, we saw it on the MACD, the RSI, the stochastic. The volume, the momentum is not really coming in as much, but you're seeing something a little different here. Okay, the volume is not coming, but you're looking at it a different way. You got to look at it in different ways, y'all. Here, this is the line, a new 52-week lows is the red line. A 10-day moving average, a new 52-week highs is the blue line. You see, we're still getting more 52-week lows and highs on the New York Stock Exchange composite. We're still hitting more new 52-week lows than new 52-week highs. Hopefully, we can see that blue line cross above the red, saying we got more new 52-week highs. See when it crossed above the red right here? Look. Woo, woo. Cha-ching, ching, ching, baby. Okay, so let's see if we can get that, see if that one day we can see that blue line of new 52-week highs cross above that red line. But right now we're seeing the 10-day moving average of volume, the blue line crossing above the 10-day moving average of red line up top, and you see the oscillator trying to get positive. Let's look at the next chart here, okay? Let's look at the next chart here. All right, this is, okay, the New York Stock Exchange, the NASDAQ composite up top, the NASDAQ composite, and you got the Amex, which we don't really look at, okay, but you got the NASDAQ composite here. Remember I showed you the divergence about a week ago? Last week we did a walk of the market. I showed it to you. If it wasn't last week, it was the week before last. But look at the NASDAQ composite. I'm sorry, y'all. I apologize. I gotta restate this. I apologize. I was talking, but I was looking at one thing and saying another thing. Disregard this top one. This is the Amex. Here's the NASDAQ right here. This is the NASDAQ composite right here. This is the Amex. We're not gonna look at the Amex. All right, we'll talk about that another day. Disregard the top one. That's the Amex. We're looking at this middle bar chart right here, which is the NASDAQ composite, okay? That's the one we're looking at, all right? So apologize for that. I told y'all I ain't had much sleep. Going off about 2.5, maybe 3 hours sleep a day for at least the last week. I got to get some Z's, some shut-eye, so I could be on top of my game. Need some sleep. I need some sleep. Okay? Now look, you see the NASDAQ? See the NASDAQ making new lows? But here's that divergence. The advance minus the decline line was kind of like settling off, not really making new lows. Bullish divergence. Okay, where the price is making new lows, the advanced decline line is kind of flat. It's not making new lows. That's a divergence. We saw a little up move over the last 4 days. I showed y'all this about a week ago. If it wasn't last week, walk with the market, it was the week before that. Facts. Okay, the advanced decline line was making a bullish divergence. Okay, bullish divergence. Let's look at the next chart. Dream chasers never sleep. I'm chasing my dream, y'all. I can't sleep. Every time I go to sleep, I wake up. Start looking at the stock market again. Chasing my dreams, I can't sleep. All right. So look, here's the Dow Jones Industrial Average up here. You see it's making the lower lows. Here's the Standard & Poor's 500 here. It's making a lot lower lows. But what is the advanced decline line doing for the New York Stock Exchange? I showed y'all this before. It was moving sideways. Okay. Bullish divergence. We got a little up move over the last couple of days. Bullish divergence. You see, the advanced decline line is telling us it's not as many stocks declining as it was before. It's more advancing stocks coming in. We see more up volume than down volume. Okay, we see the overbought, oversold oscillators starting to turn up above zero. Some improvement. I'm not saying it's going to hold. You see the key overhead resistance that we're looking at on the weekly charts of the major market indexes, the major market ETF that tracks the index. You see the overhead moving averages. You see it has some resistance, some things it got to get through on the weekly charts, the longer term charts. You see where the fib numbers are at. So I'm not saying that it's definitely gonna, shoot to the moon. I'm just telling you, we're seeing some improvement. We do have a fall today, and Lois is telling us that we got a whole lot of stocks in a very bullish upswing. So look, this is some of the market breadth. Let's look at one more thing. Okay, a couple of more things, and then we're gonna call it quits for now. All right. So here, this is another way of looking at the volume. You got what I'm saying? Are y'all picking up the jewels that I'm dropping? I'm trying to show y'all what I do to stay in tune with the market, to walk with the market. This is why I tell y'all it almost seems like we got a crystal ball, because we're watching everything moving. Hey, this is not financial advice. You know that. But wouldn't it be wonderful if it was? What if it was? Cha-ching, cha-ching, ching, ching. Wouldn't that be great? But it's not. But what if it was? I know one thing. If it was, you probably won't lose a lot of money, because you're walking with it. Okay. This is a daily chart of the New York Stock Exchange. It's an invisible chart. The data is in the background. What you got is a 50-day moving average. This blue line, that's a 50-day moving average of the data that's in the background. You see that 50-day moving average is above this black zero line? Look for a break above or below the zero line. A break back above zero from below zero is the most positive. You see on Friday we broke back above zero. The volume, okay, is more advancing volume than declining volume. This is what I'm trying to show you here. It's more advancing volume than declining volume. It's above zero, telling you it's more advancing volume coming in than declining volume. Okay, we might be seeing volume coming in when we look at it another way. This is what I'm trying to relay. Okay, look at it in a different way. Maybe the volume is coming in, because we know when we get above zero, this market likes to go on a little pop. Okay, that's just another way of looking at the volume. Let's check the volume out again. That's for the New York Stock Exchange, right? That was the New York Stock Exchange. Let's see what, let's look at the NASDAQ, okay? Let's look at the last NASDAQ, advancing, declining volume, the lines, okay? Look at this here. You see the more advancing volume, is more advancing volume in the NASDAQ than declining volume as of late, and you see it cross above its 50-day moving average, which is this blue line. You see it, okay? You see it's more advancing volume coming in the declining volume, okay? It's gotten back above its previous high right here when we had that consolidation. The volume is coming in on this is cumulative, a running total of the advancing minus the declining volume. It's more advancing volume than declining volume coming in right now. Okay, we're seeing it in a different level. Down here we got the actual NASDAQ itself right here, the NASDAQ composite. Well, you see the actual NASDAQ composite is still below its 50-day moving average. Okay, but the advancing volume minus the declining volume, the cumulative, the running total of it is above its 50-day moving average, and this has gotten back above its high. Okay, let's see what happened. So that's a running total for the NASDAQ. You see, we're seeing volume coming in different ways on the New York Stock Exchange and on the NASDAQ just now. You see what I'm saying to you? Okay, let's look at the New York Stock Exchange right here. This is a running total here of the New York Stock Exchange. We just looked at the NASDAQ, a running total of the NASDAQ. This is a running total of the New York Stock Exchange, okay? A running total of New York Stock Exchange, cumulative. You see it's above its 50-day moving average right here and got back above its previous highs right here. You see it. You see that running total has gotten back above its previous highs. The volume is coming in. But this is the Standard & Poor's down here. The volume ain't coming in as of yet. I'm sorry. This Standard & Poor's hasn't broken back above its previous high as of yet. But you see the volume breaking back above its previous high up top. You see what I'm trying to say to you? This is the advanced declining volume for the New York Stock Exchange. You just saw it on the NASDAQ. Okay, that's for the New York Stock Exchange. Let's look at the Dow Jones. Let's look at the Dow Jones real quick. Okay, let me get some of these marks over here. Let's look at the Dow Jones. You see this volume? You see the volume maybe coming in? Maybe under the hood, somebody's actually buying this doggone thing. Maybe under the hood, somebody's actually buying these doggone things. We got to see. But it sure is looking like some volume coming in when we look at it in different ways. Well, for the Dow Jones, we're not above its 50-day moving average. You can see that. This is advancing minus the decline in volume, a cumulative running total of that volume. Okay. Well, you can see here. All right. Well, the volume line is going up, but it's not above its 50-day moving average right here. And you see down here, we got the Dow Jones Industrial. It's not above its previous high, and it's not above its 50-day moving average. So it's coming in, but not as strong as you saw it on the New York Stock Exchange and on the NASDAQ. You saw it coming in very strong on the New York Stock Exchange and on the NASDAQ. Okay. So let's look at the Standard & Poor's. Advancing minus declining differential. Advancing minus declining volume line. See if the volume is coming in. Okay. It's a cumulative running total. Well, you see the Standard & Poor's, the volume is going up. Okay. It is going up. It's still below its 50-day moving average. It's not has gotten back above its previous highs. Okay, but it is going up. It's improving. Well, you see that this is the Standard & Poor down here. It's still below its 50-day moving average, and it hasn't gotten back above its previous highs yet. So you see how we looking at the volume? Okay, you see how we looking at the volume? All right, the volume is coming in. Let's finish this thing up. So you see the volume, the running total of the volume. You see how you got the running total of the volume. The NASDAQ, the New York Stock Exchange, is showing that the volume is coming in, and it's coming in, and it's starting to break above its previous highs and above its 50-day moving average. You see it, okay? But right here for the Standard & Poor, it hasn't broken above its yet. It has not broken above its high, and its volume has not broken above. Cumulative volume line is not above its highs. And for the Dow Jones, you see it hasn't gotten back. The advancing minus declining volume line, the volume, y'all. The big investors cannot get away from the volume if you know how to track them. We can see what they're doing. You see that volume line for the Dow Jones is not back above its 50 yet, and not back above its new highs. As the Dow Jones is still below its highs, okay, and it's below its 50-day moving average. Let's finish up with an invisible chart. I already showed you the NASDAQ advancing declining line, volume line, advancing minus declining volume line, y'all. I already showed you the NASDAQ breaking above its highs, okay, breaking back above its previous highs right here, and breaking above its 50-day moving average, moving up strong. Okay, I showed you that already. But let's look at one chart here, and this would be the last one. Let's look at an invisible chart of the advancing minus declining volume, the volume invisible chart. I showed you that for the New York Stock Exchange. Remember, this is the one for the New York Stock Exchange, the invisible chart. It got above zero. Remember I showed you this? Well, I got one for the NASDAQ too. The NASDAQ too. Here's the invisible chart for the NASDAQ. The data is in the background. This blue line is the 50-day moving average of volume. The data, not of the actual volume, but of the data, which is the advancing minus declining volume data running in the background. We smoothed it out with a 50-day moving average. You don't see the data. It's in the background. It's an invisible chart. Well, what does it say? The same thing we said on the New York Stock Exchange. Look for a break above or below the zero line for possible reversals. A break back above the zero line from below is the most powerful when you're trying to go long. I wrote the note here for you. So every time we see this chart, you don't forget it. After we see it for enough times, you won't. Well, look at the line. Look at it on Friday. It got back above the zero line. It got back above the zero line from below. That's telling us that it could be a possible reversal in the prices down here, okay, because why? More up volume than down volume. That means somebody might be buying under the hood. Look, y'all, are you picking up the jewels that I'm dropping? The NASDAQ is clear that its volume may be coming in under the hood when we look at it from different angles. You see it. This was all about volume, y'all. This was all about volume. This was part 3 of Walking with the Market. It was all about volume, okay? The New York Stock Exchange is back above zero, okay? The New York Stock Exchange is back above zero. The cumulative line, okay, for the New York Stock Exchange, you see that volume, the advancing volume minus the declining volume is more advancing volume coming in the New York Stock Exchange than declining. You see it, and it's back above its 50-day moving average, and you've seen that it's above zero. The New York Stock Exchange got some volume coming in under the hood from somewhere, okay? The Dow Jones, all right, the advanced declining volume line is not coming in as strong, but it is turning up, okay? It is turning up, all right? The Standard & Poor volume line, the advancing minus the declining volume, advancing minus the declining volume, showing us that more up volume is coming in, more advancing volume, but it's not quite as strong as the New York Stock Exchange. The NASDAQ is showing us on the invisible chart that we back above zero. It's more advanced in volume than declining volume, okay? The NASDAQ cumulative line is back above its previous high and is back above the 50-day moving average, more advanced in volume than declining volume. So the New York Stock Exchange and the NASDAQ is showing it's coming in, and it's showing it's coming in strong. The Standard & Poor's and the Dow Jones is showing improvement, but not as great. Are you picking up what I'm dropping down? Are you picking up the jewels that I'm dropping? If we see this volume continually to improve under the hood, soon we're probably going to see that volume showing up very clearly with our volume analysis bars on the platform and on our accumulation distribution lines and on-balance volume lines. It may be some volume coming in under the hood, y'all. We got to watch everything moving. See you in the next video.